welcome to our DeFi insurance panel. Are you covered is the topic of today, and I have two wonderful guest speakers with me, Dr. Zeynep Stefan and Denis Gorbachev. My name is Yeep, I'm from UNIT, and the first question to you, and this goes to Zeynep, can you share a little bit about yourself and about the problem that you're solving with your life works?
Hello, my name is Zeynep Stefan. I'm in the insurance industry since 2006 with PricewaterhouseCoopers. Then I started as a risk manager, managed the whole risk management, internal control and compliance functions. 2 years I worked in Italy, 5 years I worked in Germany. Right now I'm managing the risk management, compliance and sustainability functions of a venture fund, Insha Ventures, that have operations on the disruptive technologies on finance. And I'm happy being here for sharing my projection on DeFi and effect of DeFi on insurance industry.
So much. Thank you so much. Denis, how about you? Who are you and what are you most passionate about?
Right, so I'm a software developer. I've been programming since I was 14 years old, and I still code, and I do write code at Shield Finance also. I have a couple of startups under my belt. The first startup was PinTask. It was a task tracker, and I've actually managed to sell it to one of the first users. So he became the startup buyer. In 2014, I've got my first Bitcoin from a client whom I did some consulting work for. And in 2017, I converted 95% of my net worth into crypto, and I've stayed like this since that time. I was pretty lucky to get Bitcoin at a pretty good price and also invest in altcoins. So yeah. And right now I'm building Shield Finance, which is the DeFi insurance aggregator. And also we provide market crash protection for people, for traders, for investors. He bought some tokens and they don't want to lose their capital on the market crash. We provide such kind of protection.
What makes you so passionate about, working in providing coverage for users of the crypto ecosystem?
Well, I like helping people, and this is the most direct help that I can give them, to give them the ability to protect themselves against a potential crash. There are other ways to protect themselves. They can set a stop loss, for example, on a centralized exchange. But in this case, they will have to trust this exchange with their funds, and they will have to trust that the exchange will execute the order at an advantageous price for them, like so that they will not incur a high slippage. In DeFi, it's not possible. It's not possible to give the exchange your money because, well, this is decentralized, so exchange does not hold your money, and this is great. But on the other hand, it's not possible to trigger a stop loss. And we provide a solution to this. We provide this decentralized stop loss in the form of market crash protection contract. So this makes me passionate.
Thank you so much, Denis. We'll get back to this a little bit later. I would love to invite Zeynep to share about the insurance industry as a whole and the decentralized insurance, and what's the big difference between these two worlds?
Actually, yeah, the name, the DeFi and CeFi, the decentralized finance and centralized finance, give enough hints to us about the new form of finance and what changed, because the first is the intermediaries in insurance industry, that we will have more direct businesses in DeFi. And of course, we will have increased cyber risk and other technological risk that increase the operational cost of the industry. I would like to touch all 5 steps in insurance industry, insurance value chain, for explaining the possible effects of DeFi on insurance industry. First, we assume a more direct industry. That means that the customers can reach insurance collateral and insurance products directly with free, easy, that very personalized insurance products, very easy reaching and very easy to understand. So this will be the main frame of an insurance industry on DeFi. The second one is the marketing and sales. As the second step of insurance value chain, marketing and sales activities will have new forms. Means that right now you will play on a new ground, so you will need new playing tools for marketing and selling tools. That will be another effect of DeFi on insurance industry. And the policy administration, as we specified, will be more easy, because right now also customers are asking more simplified insurance products. So on an industry, as an insurance industry on DeFi platforms, you won't have papers or written documentations or hard copy documents for explaining your policies or your insurance processes. So as an industry, insurers should simplify their products, simplify their processes, make their processes more on digital and very easy to understand without any agencies or intermediaries. The third one is claims and benefits management as well. These will have new forms on DeFi, because as we change our risk structure and risk, we will have very different forms of, we will face very different forms of claims and benefits. So we will need more sophisticated claims management tools that also the AI, IoT, and machine learning have very increasing potential on this area. And also the asset management. Asset management is very crucial tool for insurance industry, because asset management means your capital adequacy and efficiency of your capital management. On DeFi, you will have, for being operating on DeFi, you will need very strong capital adequacy, because you will deal with very different risks and very different playgrounds. So you will need strong capital adequacy, and capital asset management will have more importance than others. I assume an insurance industry that have very direct channels, means that I can reach an insurance product and insurance collateral easily on more micro versions. That means that we will deal with more micro insurance than ever, and we will have very different risk structure. Means that because we are on a platform that we don't know the boundaries, the security settings, etc. And we are not the main managers of this platform. There are many different components and very different players on that. So we will deal with very different risk exposures, and we will need very different risk management tools, more sophisticated, with a very holistic view, and more as a composable way for building the financial body on a DRT platform.
Thanks very much. Do you already see any companies or use cases successfully driving this industry? What is actually already happening?
Of course, DeFi has very different components. DeFi, from my perspective, the current blockchain applications, current machine learning and artificial intelligence possibilities that insurance and reinsurance industries right now are using, these are the parts of DeFi, because they are trying to convert the conventional side of insurance and reinsurance industry. So I classify all these components on DeFi as DeFi, and that would like to change the current structure and make insurance and reinsurance industries without intermediaries on a more digital platform. So from my perspective, the current insurtech applications, the words that we are discussing right now, all the parts of DeFi, and the very initial steps were already taken on this platform by insurance and reinsurance industries.
Thanks for the high-level overview on the changes that await us along the different value steps of the insurance value chain. Let's hear from Denis about real use cases within the DeFi insurance industry. Can you share with us what is actually DeFi insurance? How does it work? And maybe for those who have never engaged with DeFi insurance, what is fundamentally different than in the traditional insurance industry as we know it? Where's the innovation?
Of course. So the crucial innovation is that the insurance providers in DeFi, they have liquidity providers. So the decision is made by the community. It's not made by the assessors, like specific people whose job is to create insurance models and then calculate the price of insurance, etc. In DeFi, the prices are set by the community, by governance. So it's much more democratic. And it also allows more people to participate in this process. So essentially, DeFi insurance, I think it can attract more capital because everybody can participate. And that's a great thing about DeFi and decentralized products in general, more participation. So I believe it's going to be possible to get better prices for those people who want to buy insurance.
Thank you very much for the explanation. Maybe we can just briefly speak about what actually do we mean with decentralization for somebody who has never heard about it. And then we go into speaking about the use cases that we are already seeing in the market. So you can give an outlook on the ecosystem of DeFi insurance.
For sure. Okay, so decentralization means that there is no single entity that controls the whole process. Of course, there are development teams and there are companies in DeFi space which are developing the products, but the ultimate decision on whether to sell insurance or not is up to the community. So let's say there is a new project, and this new project wants Nexus Mutual to list insurance on their token. In this case, Nexus Mutual members, the people who hold NXM tokens, they vote whether they want to provide insurance on this specific project. Nexus Mutual cannot vote. I mean, they can because they hold their own NXM tokens, but they only have this much amount of NXM tokens, so they don't have complete power. They have to take into account the vote of everyone. So this is decentralization. This is the power of this decentralization. I believe it allows companies to make better decisions because there are more people involved in the decision-making process, and there are much more involved, much more informed participants. So ultimately, it's better for everyone. Now, you also asked about the use cases. So I think there are two broad classes of the use cases. The first one is protection from hacks, because my friends have been asking me in the beginning. This is how Shield Finance was born. That my friends have been asking me, "Hey, Denis, it's great that you can do yield farming in DeFi, and you can put your liquidity in the liquidity pools, and you can earn liquidity provider fees. It's all great, but like there are risks, right? So those contracts can be hacked, or there are rug pulls, or many other kind of threats." I said, yes, it's possible because these contracts are pretty new. And they were asking me like how we can protect ourselves against this. And then I started researching this question. I realized I found Nexus Mutual, Cover Protocol, all the other insurance providers. And then I realized that you can insure yourselves against the hack using Nexus Mutual, using Cover, or other insurance providers which provide this functionality, insurance from hacks. So this is the first broad use case. If you are afraid that the smart contracts in which you put the money, they will be hacked, if you're afraid of this, then you can buy insurance against the hack as the first use case. And the second use case is buying insurance against the price drops, against the dumps, as they are called by traders. So imagine this. You go to Uniswap or any other decentralized exchange, you buy the token, and the price drops. The price drops 50%, 70%. It's a crazy scenario, but it's possible. Sometimes it happens because there's a rug pull. There is a malicious actor who withdraws the liquidity from the liquidity pool, and you just can't sell. That's the one of the ways. Another way is there is a market-wide sell-off. Let's say Bitcoin goes down, Ethereum goes down, every other coin goes down. In this case, your token will also go down just because of the association. And yes, you can protect yourself against this also with DeFi insurance. It's a special, the second use case that I mentioned. And we at Shield Finance, we also develop a product for this. This is called market crash protection. For those people who know, it works like a put option. For those people who don't know, it works like a regular insurance. You can buy the right to sell at a guaranteed price. So let's say you bought at this price, and you can set a guaranteed price here. And if the market price goes below, it doesn't matter. You can still sell at the guaranteed price. So you limit your maximum loss to this amount. Okay. It works like a stop loss, simply. So these are two broad use cases.
Great. Thank you very much for explaining the differences and the three use cases that typically in the DeFi insurance world, we can protect against hacks, against rug pulls, and now against market price volatility. Is that correct?
Yeah, correct.
Okay. And maybe we can speak about your typical clients and the questions they are asking when they engage with, a protocol in the DeFi insurance world. What are big, challenging questions they ask?
For sure. So we have two types of customers. The first one are the traders or the investors, basically people who buy tokens. Their problem is that they are afraid of a potential market crash, of the potential price dump. And the question they ask is how much compensation they can get if they buy this amount of tokens and they buy this amount of protection, and how much the protection is going to cost. So things like this. They want to know how much they are going to be paid in the event of market crash, and they want to know how much they need to pay now in order to receive this kind of protection. Basically, pricing questions. That's the first thing. And I believe that with the power of decentralization, because we allow everybody to participate, we can get those prices down. So I believe this is going to be our advantage against the centralized systems. Because more people participate, that means more money in the system, that means the market is more efficient. Let's see how it goes. This is my belief. We'll check, because I feel like the bear market is coming, so we'll be able to stress test our system. Okay, and the second kind of users, the second type of users are the liquidity providers. And these are crucial, like the most important users in our system, because without liquidity providers, our traders, they won't be able to buy insurance. There must be someone who will cover their losses. We developers, we create the contracts, we make the marketplace. We allow people to trade insurance. And we take a small fee, of course, from this. But liquidity providers, they earn the most money because they sell insurance through our contracts. And of course, the liquidity providers, they bear the risk. So if the market crashes, the traders, they get compensated. But liquidity providers take on their risk. Basically, the liquidity providers will lose money if the market crashes. Normally, it's traders. But in our case, like we allow people to reverse the roles, and we allow liquidity providers to earn premium for providing this protection. The kind of questions that liquidity providers have is how much I can earn as a liquidity provider. And we will provide a calculator for this. So people will be able to check different scenarios, and they will be able to see exactly how much there was in their wallet in the beginning and how much there is in the end. So they will be able to calculate their profit. Mm-hmm.
So maybe I want to get Zeynep's view on, the role of liquidity providers and how it links back to the traditional value chain, such as underwriting and pricing that you see in the traditional CeFi world. Who takes over, or who is actually affected by this kind of new innovations in the industry?
Thank you. I have two projections on that. First, if insurance regulations to the industry prefer implementing or reborning on DeFi completely or partially. From my point of view, partially will be more, will not be enough effective, because being partial means that you have to keep a part of your operations on the conventional side, means that still up and running on the traditional side, and the other side would like to establish on more digital and more decentralized platforms. So from my point of view, insurance and reinsurance industries prefer a overall conversion, means that they would not shutting all operations and rebuilding all operations or all processes on DeFi platforms, etc. But they would like to be convert all these processes step by step, starting with the main steps of insurance value chain, that's most probably with the policy side, and then asset management, and then claims and benefits side, and then asset management side comes late. And then they would like to convert their products, of course, because they will need new types of products. Because we will deal with new types of risks. This will be my point. My projection is that they are waiting for one very brave company that will make first, and then the other companies, the other parts of the industry, because insurance and reinsurance that are not alone. The service provider, the claims management service companies, etc. They are lying at the ecosystem. That's a very big ecosystem, and from my point of view, insurance and reinsurance is a very crucial part of whole economic body, and from my side, more important than banking activities. So I expect an overall conversion that one company will implement, and the other parts or other players, other components of the insurance and reinsurance that see that it's a great idea, that having using this platform and building wall operations with a high level operational efficiency and very low operational cost. And I assume that they will the other players, other companies will come very quickly, and they will try. For example, right now we are seeing very initial implementations of this collaboration on blockchain side, and I assume that the other part of this disruptive technologies will be very key on DeFi, and the insurance and reinsurance industries companies will take the first steps on the other parts of the disruptive technologies in following days, following weeks.
Great. Denis, how about you? Maybe can we have an outlook on how you see the industry and what do you want our audience to take away from this panel?
You're asking about how I see the industry in the future, how it's going to develop. Yeah, I think we will have much more insurance providers in the future. Zeynep said, I think it's correct, like they are just waiting for the legacy providers, they're just waiting for one new company to take a step into this market. As for DeFi first insurance providers, I also think that there will be more of such kind of companies. Let's see, we'll have healthy competition, as always happens in the new market, because right now the market is very underserved. There are lots of people who might want to buy insurance, they just don't know about it. Lots of people, they just trade without stop losses, they trade without insurance, basically like walking around naked. And I understand that it was initially in crypto, there were no such instruments. That's why people got used to it. I myself got used to it. But now that we have those instruments, I feel like people will learn how to use them, and they will see the benefit in this for them. So they will use it more, and we will have more companies and basically more volume in the DeFi insurance space.
Thank you too very much for sharing your amazing expertise and insights into the DeFi insurance market. It's quite an interesting market. DeFi in total is more than $100 billion worth of a market right now, and a lot of growth to be seen within the next few years ahead. Thank you very much, everyone. Have a good day.